Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, January 22, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, today falls into the camp of there are no accidents nor coincidences. Let's begin with that and show you why. Today is, as we discussed last night, an on-time type of situation. And what do you have? You have a test of the big-time breakdown candle high. So this breakdown candle here has a high of 606.41. The high today was above that, 607.82. Closing print, 606.44. There are no accidents nor coincidences. The market closed above that price by choice. It's by 3 pennies, but it is by choice. Here's a 5-minute chart, and you can see Mrs. Market knows about that price. At the 5-minute close, they did close below that price, but the daily chart close, once again, closing print 606.44 at settlement. That price is the daily close. It's interesting information, no accidents nor coincidences. That to me displays a little bit of proof how the market knows about these important places. Let's also go to the trend is your friend. She is above all the moving averages, so therefore we can safely say, hey, look, she's hovering around the all-time highs. There's nothing wrong with this tape. When you look at a weekly chart, she's hanging around after pulling back into and through the 20-period moving average on the weekly chart. She's back up near the all-time high. That's the big picture. She's in an uptrend, above all the moving averages, near the all-time high. That's the big picture. The granular stuff is more of an intraday thing, more of a day-to-day thing. She's hovering around the all-time high. That's the big picture. Pullbacks happen, pullbacks and uptrends happen. We just had a pullback. Can we have another pullback? Not even into, but even close to the 50-period moving average? And the answer is yeah, you got an open gap down here, scare everybody away again. Of course that could happen. Is that a big deal in the big scheme of things? No, not really. We're still on board with the Trump pump. It will come to an end. The markets will pull back like they always do. There'll be something that comes out of the blue, out of left field. You wake up to it. It comes out in the middle of the day. You get an intraday reversal. Something like that will happen, whether it's a political related policy, whether it's a global political related issue, geopolitics, maybe something with tariffs. It could be anything under the sun. It could be the Fed. Something along the line, sooner than later, will spook the market and produce another pullback. Write that down, put it on a sticky note. It's here forever. Again, to the weekly chart, just looking at where the market is from a big picture perspective, and we will say, look, it's going to be extremely important where the market closes the week. Are they going to close at a new high this week, or are they not going to close at a new high? If they don't, it's not a material change. If they do, it's interesting information, and it says a lot for the bull case for higher prints, higher prices. Hey, by the way, how's the lazy swing trader automagical algo system doing? How about 2 more profit targets hit today? It's been a freaking bonanza. That's a technical phrase. How about travelers? 233.46 was your entry alert. How about 7.3% up to 250.50? It is now what we call a risk-free, emotionless trade. That's a nice trade. How about Eaton Corp? 356.70 entry, 375.25, 5.2% gain. First profit target. Again, another risk-free, emotionless trade. How you doing? Lazy swing trader automagical algo system was buying as the market declined into the weekly 20-period moving average. Unloaded them on the way up, base hits, doubles, profit targets. It's the way the system works. It removes the emotional part of trading. You don't have to make the decision. You get the alert, you do the thing. But wait, there's more. What about the intraday traders, inside the numbers and live room members? Well, guess what? Let's focus on the thing right out of the gate. We'll start with the early pivot today coming in at 605.35. Let's start there. Above, and she's bullish for another leg higher toward the likes of 607.45 and higher. 605.35 pivot. 5-minute chart, right of the vertical is today's activity. Blue line is 605.35. Low of day is 605.36. Once again, no accidents nor coincidences with these numbers. Stayed above by 1 penny. We had traders take that trade, ride it upward to where? What was the target? 607.45. And a little bit higher, but that was a pretty good bullseye if you ask me. 607.45. We put two numbers on the board at 0 dark 30 this morning, and she did them both. What I would urge you to do is pause the video, read the notes, and go back to the chart to double check the work. 9 o'clock, what's the scoop today? 605.35, 607.45. Next number up in the sequence. This morning we started with same church, different pew. Pause the video, read the notes, go back to the chart to double check the work. Everything you need to be successful in the S&P is in here each and every day. Whether you're trading options, exchange traded products, futures, micros, any of the kind. We had two stocks on the move today. We had J&J or Johnson & Johnson, and we had Halliburton. Let's take a look at those charts. Here's J&J, so it opened below the first number. So that number's off the board like it doesn't exist. Came into the second, almost got to the third. This is a little support zone, which became a support zone when they opened below the first number. And you can see how they bounced away and grinded up, finishing basically around the highs of day. So the number or zone in J&J worked. The numbers work. How about Halliburton? How about 28.55? She spiked it, rallied back. You could see what happened. Came back at the end of the day, but certainly gave you the deal. From a day trading / scalp trading perspective, this was another winner. The numbers work. We also show a list of markets with prices, support and resistance numbers. Snap the table. Put some of these prices on your charts and see what happens each and every day around these prices. The numbers work. Inside the numbers, live room, lazy swing trader automagical algo system. We have something for everybody. What's going on in Camp IWM? Well, they didn't quite get to the higher end, the top of the big time breakdown candle. They didn't get to 231 yet. They could be eating time off the clock. They have yet to touch the 50-period moving average, but they are in an on-time type of situation. Chose to have a little bit of a pullback today. The IWM is, in fact, my favorite market leading indicator, and we will put this down on a piece of paper, on a sticky note. This is of note. It is a potential puzzle piece, and it is, in fact, on the table. Favorite market leading indicator bucked the trend today down $1.50 or 0.6%, which leads us right over to the folks down at the transportation department, down 106 points, again, 0.6%. On time type of situation. We talked about it last night, and they sniffed, but they did not touch the 50-period moving average. I just find it interesting. It was an on-time situation. Two favorite market leading indicators were down today about 0.6%, a touch more than that. The IWM is my favorite market leading indicator. The transports is my second favorite market leading indicator, but a number one canary in the coal mine. What about the Q people? Big time gap up over the breakdown candle high. They are now working on the next big time breakdown candle high in the sequence. We'll see what happens with the Qs in its on time type of situation, which is in fact today. So I'm actually looking for some follow through pullback in the transports and the IWM tomorrow. I'm actually looking for at least a pause, if not a pullback in the major indices, the Qs, the S&P, the Dow, if you want to throw that in. Doesn't mean it's a guarantee, doesn't mean it has to happen, but that's what I'm looking for. Next in line in the sequence here, you see they got above this high here, which is a pivot high. So the next in line is this area of the breakdown candle high right in here, which they poked their head into today. So in that top portion of that spot, they can run a test of the high, they can spike the high, but to get through the high from a first time, best time perspective is the unlikely scenario. What about the financial space? The XLF down 25 cents today. We're not going to make a federal case out of it, but here we go again with the on-time situation across all the markets, and the financials join the party in the pullback situation down about 0.5%. Now, granted, she's above all the moving averages. Trend is your friend. Above $50, she's fine. We talked about that for weeks. Just putting things in perspective from a big picture perspective. Perspective shouldn't have been said twice in the same sentence. Rocket ride for Camp SMH, better known as Smash Mouth. You get a better view from the weekly chart. You could see what's going on here. Riding the 20-period moving average, fake out breakdown situation. And here they are above all the moving averages, trying to break up to run a test in the neighborhood / vicinity of the big time breakdown candle high or next one in the sequence. Write that number down, 272.85. Put it on a sticky note. It's important. You'll see it on the board in the morning. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.